we've talked a lot about risks. China, Iran, maybe the stuff we're not talking about.
Right.
You believe there are some risks hiding in plain sight. What are they?
Well, this trade dispute, obviously, we have lots of them. Obviously, intellectual property protection is something that has bipartisan support, has worldwide support. And this particular issue is there with China. But there has been this wider issue of compliance with Iranian oil sanctions, which has come up of late. We have no idea whether we're pivoting to additional tariff conflict with the European Union. Nothing has been actually resolved. So the market is given credit. I want to look at it from a market perspective. Markets have looked past a good deal of these trade disputes, and absolutely nothing, whether it's steel and aluminum tariffs, the USMCA, the NAFTA rewrite, none of that has actually been resolved. So here we see.
And by the way, trade with Mexico is $120 billion more in exports to Mexico than we do with China. Mexico is a bigger trading partner by far than with China. If we don't get a deal, if both sides, China and the U.S., walk, does the market tank?
I think there'll be a negative impact for sure on that. Obviously, it's not everything. And I just, bear in mind that this has been a good year for good reason. Share prices in the United States, 1% higher when they were in January of 2018. By my estimates, EPS in the United States for large cap, 24% higher than where we were at the end of 2017.
Pretty good.
It's very good. Monetary policy risks have been suppressed. That was a very, very serious problem. But when you look at these trade disputes, whether it's for China, whether it's for the United States, you could scale them against GDP. You don't come up with big numbers, but you could see potentially big impacts on corporate profits. You see it riddled throughout the ISM report.
So if we don't get a trade deal, do we start to see the analyst community start to ratchet down earnings expectations?
I'm not sure that they're going to get that right in real time, but there's going to be greater uncertainty on profits, and there are potential disruptions across border for various companies, large cap tech companies, semiconductors, again, have had a very big run up, and they're highly sensitive to cross border trade. So this mid-year period is often one which we get volatility. It's not that I think that we've come too far ultimately in share prices, but when you're dealing with a market that has looked past these particular types of risks and suddenly has to confront them, that's when you're going to see volatility pick up.
Yeah, certainly we're going to be watching these negotiations because, as we saw yesterday, this is indeed a market that is reliant very much on the outcome of these negotiations, regardless how big our trade may or may not be with China.